Open your cerebral cortex and shift your lobes into upper beta phase, because you are going to have Bitcoin knowledge transmitted directly into your vestibulocochlear. Your host of Bitcoin Knowledge is Trace Mayer, an early Bitcoin advocate since it cost $0.25, but this is not intended to be investment advice. A doctor of jurisprudence, but this is definitely not legal advice. And an investor in core cryptocurrency infrastructure, including Armory, BitPay, Kraken, and Mitagio, but this is not a recommendation of those services. Here, you get fed via direct mind download with pure and free Bitcoin knowledge.
Welcome back to the Bitcoin Knowledge Podcast. We have a valuable interview today with Aaron Zirker. He's CEO of Mercury Digital Partners, and they operate Coinado. So welcome to the podcast, Aaron.
Thanks, Trace.
Yeah, so let's get a little brief introduction. Like, what does Coinado do exactly?
So Coinado is a full management service for connecting Bitcoin exchange accounts to a centralized server that automates arbitrage between those exchanges. So in essence, a client can create an account with two different Bitcoin exchanges, such as Kraken or Bitfinex, fund those two accounts on their own, and then link their API keys, which both exchanges allow creation of, to our central server, which securely houses them. And what that enables us to do is to trade on behalf of the clients. It doesn't enable us to withdraw or deposit any funds, but it gives us full trading control over the exchange. So we have proprietary algorithms and very experienced traders who examine the relationship between the two exchanges that you choose and look for opportunistic times to book market neutral trades by buying on one exchange and selling on the other.
So arbitrage.
Exactly.
How about a little bit of your background? Like, how'd you get into Bitcoin and like this crazy wild world?
Sure. So I started as a microbiological researcher at Weill Cornell University, and that was around 2011, 2012 that I was working there. At that same time, Bitcoin had piqued my interest just as a theoretical topic and as an idea, and it hadn't really sparked anything yet. I messed around with some very basic mining equipment, GPUs back in the day, and eventually moved on to using them for Litecoin once that was kind of a thing. Not really made a ton of money that way, but just really interested in the technique and what went behind it. Then I had a little Bitcoin to trade, so I went on to some of these exchanges and started trading on my own. Saw some very profitable patterns that exist just in the normal Bitcoin market, so I started looking to create a company behind taking advantage of those patterns algorithmically.
What would some of those patterns be, and what type of skills are we looking at using in order to take advantage of them in order to make profit?
So a lot of the patterns would be, you'd look at two markets and you'd say, normally over a month period, one market may have a 1% or a 2% premium to another market. And that happens because of geological laws, it happens because of regulatory reasons, it happens because of reputations of the market, and it happens because of access those markets give to their general clients and their client base. By really studying some key markets, we've been able to find a relationship where we kind of know what that market will react to in terms of if the Bitcoin price goes up, goes down, and how that relationship interacts. So using that knowledge, we're able to book simultaneous trades by buying on one side and selling on the other, and have a pretty high confidence that that's going to mean revert to go back to the norm, and then that we can reset that trade afterwards when it mean reverts.
So you're using some mathematical terms here, like mean reversion, confidence. Perhaps you can explain those terms in a little bit more depth. Absolutely. For those of us that just, math's not our best subject.
So if a market relationship is kind of a normal relationship over a month, there may be times when Bitcoin is particularly volatile where that relationship spikes. So if Kraken is 1% over Bitfinex at all times in a month or on average, there might be a market spike that happens, and the spike suddenly, Kraken is now 5% over Bitfinex in terms of its price. So what I mean by mean reversion is that 1% would be the mean, and that 5% would be something outside of the mean where it's an outstanding opportunity to go and sell coins on Kraken. And when we're confident, when we say that we're confident that it will mean revert, we're statistically determining the chances that that 5% will return to 1%. And when that happens, we'll be able to go back to a neutral trade.
The term confidence, how does that play in with all of this?
Yeah, so that's a portion of the statistical analysis that we do on these exchanges. So we'll look at how many times Kraken goes 5% over Bitfinex in a given month, and if that is a normal event or not. For instance, the risks involved are mainly with trusting these exchanges and working with them in a normal capacity. So to give you a prime example, Mt. Gox had a normal relationship with Bitstamp for a long time. It had a 1 to 5% premium in price. That price during the crash blew out to 15, 20%. That was not an expected event. It's not an event we had seen in the past, and therefore we knew that was a confidence move. It was something so out of the ordinary. The standard deviations or the probability that would happen were so high that something other than normal market fluctuation was going on. So Kraken, Bitstamp, Bitfinex, they normally have this range that they fluctuate inside of, and we're not worried that they're fluctuating inside of it because we've seen them go out there and come back in those trading ranges. So we're fairly confident that will continue to happen as long as the exchanges stay healthy.
Yeah, so that's actually one thing that I like to do when assessing long-term trends or even secular trends is to look at the price and establish a 200-day weighted average, and that becomes a relative price. And then from that relative price, I like to look at 1 standard deviation, 2 standard deviation, 3 standard deviation, and then from like whenever the current price gets into the 3rd standard deviation relative to the relative price, then it might either be undervalued or overvalued. And so that's how I kind of look at longer term trends from a statistical lens, because the 200-day moving average, that's about 8 months. So it's going to filter out any daily news. It's going to filter out these black swans that you're talking about when it comes to, say, the counterparty risk with Mt. Gox.
Exactly.
So are we using weighted averages to determine these normal confidence bands?
Yes.
What can we get a little bit more granular in that sense?
Sure. We use a simple moving average to figure out the mean between the one exchange's price and the other exchange's price over a 30-day period. We create our own proprietary graphs of these price differentials, and then basically it's up to human interpretation to look at them over time and to use a long enough time period, as you said, to find those 2-3 standard deviation moves where we might be very profitable, but at 3 we start to get worried that there's something wrong with the exchange or that there's other factors going on that are out of our control.
Are customers able to scale, like how much risk or how many standard deviations or some of these different variables? Are they able to do that, or do you handle it all on your end to make it kind of turnkey for customers?
It is turnkey. Past setup of the exchanges and the initial balance distribution, it's all turnkey. We don't ask our clients to kind of define risk. We really think that we're in a position to do that for them and do that well for them.
If you're good at this, and if it's an extremely high probability that you're going to be making or booking profitable trades, and if the risk on those trades is just the execution risk and the counterparty risk of the exchange, why not just do this all yourself? Like, why kind of open up and do it for customers? Like, why not just trade it all your own money?
There are multiple reasons. We think the capacity for this trade is very high, so we want to open it up to the public. I think this tool, when I first built it, was something that I built for myself that I really wanted to see on the market as a non-institutional investor and as just someone who is very interested in Bitcoin. So I'm eager to see people like me having access to it. On the other side, I can't talk about it in specifics, but we are launching a hedge fund in the middle of the summer to take advantage of some of these opportunities in a very different light, where we're in total control and management of the funds. But that will also be applying some other strategies, such as market making and direct arbitrage, and some of the things we can't do without having direct control over the funds.
Now, when you talk about there's a lot of opportunity for trades here, I mean, how much total capital are we talking about being able to be put to work to take advantage of just arbitrage in the Bitcoin markets?
So on analysis of the 4 Bitcoin markets that we cover, which are BTCE, Bitstamp, Bitfinex, and Kraken, we believe that there's a total of around $40 to $60 million a year that could be put to work in the way that we're working, and not have any slippage or loss of value. Beyond that, I'm sure there's still opportunities, but you're going to see some diminishing returns.
How can people find your website?
So it's pretty easy. It's coinado.com, coinado.com.
Okay, perfect. What would be some advice that you have just for traders in general? You know, people that want to make some money.
Yeah.
Bitcoin's got this volatility that
Absolutely.
makes traders happy.
It makes traders happy, and it can also make traders very sad. I would say any trader who's looking at the market should have some exposure to Bitcoin, because I think it's going to be going up in the long term. But intraday volatility is high. If you're looking to make a short-term gain, it may be difficult to use leverage and to use some of the stuff that's really readily available to make this very short-term positive gain. Our philosophy is that we want to look at it as a long-term investment and also have a trading element to it. So in our system, we're 50% exposed to Bitcoin and 50% exposed to the US dollar. And the trader can decide to cover their risk in Bitcoin on their own, shorting it or not. And we think this is a very good setup because it exposes you to Bitcoin in the long term, but it also exposes you to the volatility, so you don't feel like you need to sit there and attempt to make 5% by booking trades exactly in a market-making scenario on one exchange. Overall, I think there's a really healthy community. I'm part of a couple different chats, such as TradingView and Whale Club, that like to just talk about it as in theory. And I think if you get deep into the theory, there is some good profits to be made as a directional trader, but it's not for the light of heart.
You mentioned that you'd also mined some Litecoins, and we got a lot of different coins out there now. We got Monero and Dash and Peercoin and Namecoin. And got any thoughts on kind of the altcoin market and being able to trade them and
Absolutely.
making money?
Yeah. So my former company, which was an iteration of this, was offering Litecoin as an arbitrage, and will most likely be offering Litecoin as an arbitrage as well between BTCE and Bitfinex. It's an incredibly profitable trade because of how volatile it is. But then at the same time, you have to own the underlying asset, and the altcoin market has taken a real hit in the last year, even relative to Bitcoin's fall. It's fallen quite exponentially. I definitely mined Litecoin when it came out. I still believe that alternatives to Bitcoin are possible, and that the infrastructure around Bitcoin, while I think the difference between Bitcoin and the dollar was gigantic, but the difference between Bitcoin and the next thing, it's going to be much smaller. So I think the acceptance rate is going to be reflective of that. Now, however, that doesn't mean that something can't come along that's so different from Bitcoin that people will say, this is a real improvement. And I think until that happens, investments in altcoins are going to be a difficult prospect.
What are you most optimistic about when it comes to this whole cryptocurrency industry?
When I was growing up and in college, I kind of saw the financial crisis happen. And when I really got into Bitcoin, one of the things that really excited me was how transparent it is. And how using the blockchain, if you really use it the way it's supposed to be, instead of in private companies with your own accounting, how that would really change how public perception and how transparency happens inside of financial transactions. So that's really my favorite part of Bitcoin. As far as its usage on every day goes, I carry 10 Bitcoins in my pocket, and I pay my friends anytime they can, or anytime I can do it. I use it all the time. I think it's just the easiest and best transaction method as long as it's accepted, and that's kind of where we're at, right? We're at the acceptance phase where where I want to walk down the street and buy my hot dog at a hot dog stand by flashing my phone.
We can't be around Bitcoin very long without getting a crazy story or two. What would be kind of a fun story that you could tell the audience about your experience in Bitcoin land?
I'd say, my experiences in Bitcoin I'd say the most hilarious thing is how much money I put in developing all of these technologies. Because I put in all of my own earnings and all my own Bitcoin, and I bought a bunch, and I was a pretty early investor, $80, $90. And I'm not saying that, I didn't lose most of that, but just the whole experience creating a trading system is just so engrossing in like the kind of executions that you make before you're really set up for, production. So it's been about 2.5 years of that, and we've seen some crazy trades happening, like, buying and selling at ridiculous prices that are, wouldn't have been possible if you didn't have a trading system set up, like buying on during a crash Bitstamp at like 600 and BTC at like 300, and seeing those opportunities, and it's like seeing some of this stuff happen that probably will never happen again because this market's going to be moving into a more stable environment. I think some of those things have been the craziest.
Taking advantage of a $300 arbitrage play on an underlying of $300 is just insane.
Yeah.
Kind of crazy.
Yeah. So I've seen some of those, and we've also seen some crazy mistakes. Like we built the system out of our own money, so we've seen the opposite of that, right?
Of course we have. That's everybody's story, and we're sticking to it. I don't have any Bitcoins. It's been great. We've had Aaron Zirker, CEO of Mercury Digital Partners, founder of Coinado, yep. Coinado, where you can go and hook up your different Bitcoin exchanges and arbitrage. Thanks for being with us on the podcast.
Thanks a lot, Trace.
Be sure to get a copy of the free Bitcoin Guide at freebitcoinguide.com. Got a question or suggestion? Record your voice at bitcoin.kn. Don't be shy. To help the show, share bitcoin.kn with friends, post about it on Reddit, and otherwise spam the interwebs. Your iTunes comments and 5-star reviews are very important to us. Please continue tuning in to the Bitcoin Knowledge Podcast, where we release interviews with the top people in the Bitcoin world. Now take some choline and let that Bitcoin knowledge consolidate.